So my greetings to everyone. In the ongoing series of Finance for Everyone, today we are talking about the different type of loans which are given by commercial banks. So to begin with, let us start with the type of unsecured loans, because there are two types of loans what they give. One is a secured loan and the other is the unsecured loan. So when you talk about the unsecured loans, the first of which is called as a personal loan. Personal loan is the most popular loan which is of unsecured category in India. The personal loan can be taken for any kind of a requirement like meeting your medical expenses, for your travel expenses, for your renovation of home, etc. And definitely, when you talk about the type of the person who has to take a personal loan, if the person is into, say, a private job or into a stable job, the interest rate, the amount, the tenure, etc. will be different. So when you talk about the differential type of the interest rates, what they talk about, the differential type of the duration, what they talk about in case of the repayment of the loan, differs from 10.5% to 36% per annum. Now the interest rate also depends upon the total amount of loan what you're taking, your credit scores and the repayment tenure, etc. Now in case of high credit score, which is having a very good relationship with the bank, then the interest rate on the personal loan can be lowered. Now, what is a personal loan eligibility criteria? Now, in case of age, that is a salaried and self-employed, difference of age is 21 years to 60 years. And in case of self-employed, it is 22 to 55 years. The net monthly income is 15,000 for a salaried man and 25,000 for a self-employed category. The minimum loan amount is 50,000 in case of salaried and 50,000 in case of self-employed. The maximum loan amount is 25 lakhs in case of salaried, and amount for the self-employed is rupees 50 lakhs. So, what are the documents which are required when you have to apply for a personal loan? The requirement is, the first is proof of identity. For a salaried individual, it could be a passport, voter ID card or driving license or a PAN card. So, these are the documents which are taken as a proof of identity in case of the salaried individuals. Whereas in case of self-employed, we have a passport, voter ID, driving license or the PAN card. So more or less the requirement when you talk about the proof of identity vis-a-vis salary class and self-employed is almost the same. The second most important document which is required is passport or utility bills, that is the proof of residence. And similarly, the same document is required if you are a self-employed individual, that is a passport or the utility bills. And the third most important document which is required for the bill is the bank statement of salary account for past 2 years. And when you talk about a self-employed category, audited financial statements of the past 2 years is required as a proof of income. So as of now, when you talk about the documents which are required in case of a personal loan which is of unsecured category, which is the first is a proof of identity, then we need a proof of residence, and then we have a proof of income. So now coming on to the second type of unsecured loans. Next is your educational loans. Students can take loan for raising the fund for their education. These loans usually cover for living expenses, tuition fees, cost of books, stationery, examination fees, library fees, education related expenses. So primarily as a student, what you can think about is all covered in the educational loan. As a student, if you relocate from your city, you need rent. You need expenses to cover up your living expenses, the tuition fees, the cost of the books, the examination books, and the library fees. So all these things are covered in case of the educational loans. And duration of education loan may vary from 1 year to 20 years. The rate of interest on education loan starts at 7% per annum in interest. So these are primarily the features when you talk about the different types of loans as we have discussed here. Like the other part when you talk about the concept of taking into consideration the amount to be applied for, the documentation which is required in case of a personal loan, as we have already discussed, the proof of identity, the proof of residence, the proof of income, and in case of the educational loans, the entire expenses spectrum which we have discussed. And basically if you talk about the time period, it also varies from 1 year to 20 years, and most likely the rate starts from 7% per annum as the rate. Now, compare the top education loan offers for 2023. The Punjab National Bank started the rate of interest from 8.55% onwards up to 1% loan amount. Up to 10,000, the State Bank of India offers from 8.3% onwards. The Axis Bank, the rate is 13% to 15%. So, if you talk about the different type of the banks and the different types of the loans, there is a variation. So, in case of Bank of Baroda, it is 9.15%. In case of HDFC, it is 12.75%. The Kotak Mahindra is giving at 16%. So, there is a variation in the interest rates, but it starts from 7% and varies till say 20% also. The third type of loan is your vehicle loan. This loan is taken to buy new and used vehicles. The loan tenure can range from 1 year to 7 years, and this is a snapshot of top vehicle loan interest rates. When you talk about State Bank of India, the car loan interest rate is 7.7% per annum onwards, followed by ICICI Bank, which is again 7% per annum onwards. In case of Indian Overseas Bank, it is 7.25% per annum onwards. Then Canara Bank is 7.40 and HDFC is 7.50 per annum onwards. So these are the car loan interest rates, followed by the name of the banks for top vehicle loans interest rates. Now there is, as we have the eligibility for the personal loans, we have the eligibility criteria for the vehicle loans also. Like in case of age, the age in which you can take up the loan is 21 to 60 years, and if you are self-employed, it is from 18 to 65 years of age. So mind it, if your age is more than 60 in case of salaried and more than 65 in case of a self-employed, it is very difficult to get a loan. And then we have the annual income also as a criteria, rupees 25,000 in case of salaried and minimum turnover of rupees 40 lakhs in case of self-employed. Now this particular condition of annual income is kept. Why? So that there is a reassurance to the bank that the people who are taking the loan, they are able to pay back the amount what they have taken from the banks. Now in case of loan tenure, it is up to 7 years in case of salaried people and up to 7 years in case of self-employed also. Then we have loan to value ratio. This is up to 100% in case of salaried, followed by up to 100% also in case of self-employed. Now the fourth type of loan what the commercial banks offer is a business loan. Now these loans are designed to meet the requirement of capital, expansion and the new staff, etc. The business loan details are as follows. The interest rate for the business loan is 8.85% per annum onwards. The loan amount up to rupees 40 crore. The loan tenure is up to 120 months. The processing fees is up to 6.5% of the borrowed loan amount. Now, there is a comparison of the business loans in India by a different bank. If you talk about the lender HDFC Bank, the interest rate varies from 11.9% to 21.3% per annum. That is the rack interest rate. The loan amount is between 50,000 to 50 lakh and the loan tenure is 12 months to 48 months. Compared to IIFL, the interest rate starts from 11.75% per annum to 32% per annum. The amount of the loan is rupees 1 lakh to 50 lakhs and the duration of the loan, tenure of the loan is between 12 months to 60 months. Then we have a Fulton India. The interest rate starts from 17% per annum to 21% per annum, which is floating. Up to 50 lakh is the loan amount and up to 48 months, beginning from 12 to 48 months is the tenure. Then we have DHFL. The interest rates is 17% per annum onwards, up to 10 lakhs without collateral and up to 5 years. And when we have a Magma FinCorp, the interest rate starts from 15% per annum to 26% per annum, up to 30 lakhs is the loan amount and up to 36 months is the loan tenure. Now this kind of comparative interest rates, loan amount, tenure amount and the lender information is very useful, which is useful for everyone because everyone has to start some loan or the other, be it a personal loan, be it a vehicle loan, be it an education loan, be it a business loan. So this kind of a relative and a comparative figure is very, very important for all of us to take the right kind of decisions. Now, coming on to different types of bank loans, unsecured loans and secured loans. So we have done as of now the unsecured loans. So let us have a look on what is a secured loan. As the name suggests, secured loans, which is given against some collateral as a condition of borrowing, is called as a secured loan. The loan is based on the collateral value. Coming on to the features of secured loans. The first is loans are given against some collateral like homes, vehicles, assets, property, etc. Next is your lower interest rates. The third is more flexible repayment options. The fourth is option of fixed rate and variable rate. The fifth is loan approval is faster and the sixth is customizable loans. So these are the features of secured loans, that is the amount which an individual wants. They have to keep something or the other as a security or as a collateral. It could be mainly the popular choice is against gold, against homes, against any kind of a vehicle or any kind of a precious things what you have. Here, since the amount which is extended as form of the loan by the bank to the borrower, the interest rates are relatively lower. The flexible repayment options are also given because the bank's risk is less in this case, because in case of any kind of a default, the amount which is kept as a collateral, it can be used to pay off the loans. On the similar pretext, we have a fixed rate and a variable rate option also, which is given to the borrower. The loan approval is also faster. Nowadays, we are also getting the advertisements that take a loan on phone. So it is that easy because the bank risk is the least in case of the secured loans. You can also customize it the way you want. So the customizable loans are there. So let us first talk about the home loan. A home loan is normally taken to buy a simple, new and a resale home, construct a home or renovate or extend an existing one. The money is borrowed at a very specific rate and repaid within a particular duration in smaller installments known as equated monthly installments, which is also called as EMIs. So, since the amount what we take in the form of a home loan, the amount is enormously high. So that is why we break and give the option to the borrower to return in their convenient equated monthly installments, which we call it as EMI. So on the screens you can see here the different home loans details, which is given by HDFC, State Bank of India, Union Bank of India, and you can see the interest rates also varies from 8.5 to 8.6 to 8.8, and similarly the amount to be returned, the tenure also varies. So these are the equated options, and when an individual has to take a decision, that is from which bank they should take the home loans, so they make a comparative figures like this, and eventually the amount which is suited to the individual, then they take a final decisions. It is not that easy also. Even if you have a collateral security to be kept for taking a home loan, it is also not that easy to take the loan. You have to fulfill certain eligibility conditions, which we call it as home loan eligibility. So, eligibility in case of age. What is the requirement? The minimum age to take a home loan is 18 years and the maximum age to take a home loan is 70 years. This is number one. So, age is primarily the main criteria of getting a home loan. Followed by a resident type. The applicant must be resident Indian, non-resident Indian, person of Indian origin. So we have an NRI and PIO option here also. So the next is your employment. The applicant can be a salaried person or a self-employed person. And what is a net annual income? At least rupees 5 to 6 lakhs depending on the type of employment. And then we have a residence. The applicant must have a permanent residence and the rented residence where he or she has resided for at least a year prior to applying for a loan. And of course, the credit score. A good credit score of at least 750 or more obtained from a recognized credit bureau is also an essential condition to take a home loan. So, age, resident type, employment, net annual income, resident and the credit score primarily are all taken into one frame before finalizing the home loan eligibility. Then we have the documents which are required for the home loan, of which the first is the driving license. That is a copy of electricity bill, water bill or a telephone bill. And the other documents what are required is the employer identity card, because every employer in an organization is given a number. Then we have a PAN card, which is a copy of a valid passport, Aadhaar card and the driving license. So, duly filled loan application form affixed with 3 passport size photographs and the voter ID. The loan account statement for previous 12 months if the applicant has any other ongoing loan from other banks or financial institutions. Then we have a valid passport. So, in case of the other documents, we need a valid passport, that is the bank account statements for all the bank accounts owned by the applicant for last 6 months. Now we have the income proof documents, the profit and loss account, the balance sheet, the business address proof, the TDS certificate, that is the tax deducted at source certificate, the ITR, that is income tax return for last 3 years, the salary slips for last 3 months. So, this is the first thing what we require, and then we can have a loan against the property, which we call it as LAP. The loan against property, also known as a mortgage loan, it helps to raise the funds by pledging your residential, commercial or industrial properties as collateral. Now coming on to the duration of the loan against the property, it may vary from 1 year to 20 years, and the rate of interest on the loan against the property starts at 8% per annum to 25% per annum. Now loan against property details. The interest rate is 8% per annum onwards. The loan amount is 25 crores up to. The loan tenure is up to 20 years and the processing fees is 1% minus 3% of the loan amount plus the GST. Now coming on to what are the best loan against property schemes. So here are few examples. Starting with the State Bank of India, the interest rate is 8.45% to 10% per annum. The loan amount is up to 7.5 crores and the tenure is 3 to 15 years, followed by HDFC, IFC, Tata Capital, Axis Bank, Kotak Mahindra and IIFL. So if you see in a holistic view, the interest rate varies from 7.5% to 25% also, and the amount is up to 7.5 up to the value of the property up to 5 crores up to 10 crores. So the tenure also is up to 20 years. So if you see here, these are the comparative analysis of the banks which are giving the loans, the interest rate what they offer, the loan amount what they give and the tenure. So whenever an individual again has to see how they are going to move about, these comparative statements you have to make, and they can be auto generated. There are certain websites also which serves this, that if you want to go in for a particular loan, then which bank will give you which option. So as per your needs, as per your pocket, as per your collaterals which are available, you can take the decision. Next we have a loan against securities. It is a type of a personal loan taken against pledging your securities. The securities include the life insurance policies, stocks, shares, bonds and the mutual funds. So whatever financial securities you have, they can be taken as a base to take the personal loan. You have to compare the loan against securities offered by a different bank. This is a very important tip. You cannot just take a financial decision taking a loan from anybody. You have to make a comparative scenario in mind. You have to build that frame in which gives you a holistic view of the comparison of the different banks, the tenure, the amount, the interest rate, what they are offering on the loans, and then eventually you have to compare the different banks, interest rates, loan amount and the tenure to come on to a final decisions. The next type of loan is a gold loan. It is the type of a personal loan taken against pledging your own gold jewelry and the coins. The gold loan is sanctioned as a percentage of gold given as a collateral. So interest rate is 7% per annum onwards. The loan amount is up to 1.5 crore. The loan tenure is 3 months onwards and the processing fees is 0% to 2% of the loan amount plus GST. So you have to compare the gold loan by top banks in India. So here is a figure and here is a snapshot. So then we have a State Bank gold loan, HDFC gold loan, Muthoot gold loan, Axis Bank loan. Compare the interest, amount and tenure and take a particular final decisions. So primarily these are the different types of loans, secured, unsecured, the different parameters what they have to take in mind, and eventually this particular lecture, which is Finance for Everyone, should be given a due importance in terms of taking the decisions, because each one of us have a particular age, have a particular income, we need the loan for a particular tenure and the eligibility criterias. So all these vital information have to be kept in mind before taking any kind of loans.